Boss, do you currently have a personal loan application under review? If you do, I want you to listen carefully because in today's conversation, I will share with you 5 things you should do to get approved super fast. Super fast. Don't you go anywhere. You're going to love today's conversation. I guarantee. Another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to talk to you about personal loan under review. And here are 5 things you should do to get approved super fast. Sometimes you just apply for a loan and something happens and the lender tells you, well, your loan application is under review. You're going to have to wait a few days or a few weeks, whatever, to actually approve you. So this conversation is going to be about things you can do to speed up the process. So here are the steps. The first thing is your FICO score. You need to confirm your FICO score is accurate and free of any errors or any derogatory items. Very important because sometimes, the lender might want to verify your FICO score to make sure that this is actually true. And what they do is that they might pull TransUnion, Equifax, or Experian, all 3 of them, or just one. Okay, so what you have to do as the applicant is to actually, in the meantime, go back to your FICO score, to your report, to your credit reports, and make sure there are no derogatory items, no inaccurate item, no adversarial items that actually is precluding you from getting the loan. Okay, this could be a collections account. It could be a charge off. It can be a mistake around your identity. So there are a compilation of things that you have to actually think about. And I want you to really take steps proactively to clean that up, okay? This will help the lender actually say, okay, this person is clean, quote unquote clean, and we can actually push his or her application to the next level, okay? Very important. So when we talk about checking your FICO score, you can actually check that through annualcreditreport.com, or you can go to Credit Karma, you can go to Wallet Hub, you can go to NerdWallet. There are a lot of places out there that actually give you this information, okay? And even your credit card, if you have a credit card right now, let's say Navy Fed or Capital One or Discover, they actually, or Bank of America or Wells Fargo, most credit card issuers actually have a free credit monitoring service that allows you to check your FICO score, okay? Very important. So credit card. Your credit card payment status, your payment history has a big impact on your FICO score. So you want to make sure that your FICO score is accurate and free of any derogatory items, and you want to communicate that with the lender. Number 2, son, I'm talking to you here. Okay, so if your personal loan application is under review and they said, well, we will approve you in 24 hours, and 1 day, 2 days, 3 days, 1 week has passed and nothing has happened, I want you to really pay attention to your income. Usually when your loan is under review, the underwriter, the lender, will actually communicate with you. They'll tell you what kind of info, what kind of additional info they need, okay? But in your case, if they don't say anything, I want you to go back and look at your income information. You want to confirm any data about income that the lender has asked you to corroborate. Very important. So when we talk about income, son, daughter, what are we talking about? We're talking about your pay stubs, okay? And in some cases, the lender might ask you to actually provide your tax returns. Very important, because a lot of people think when we talk about income, it's got to be a paycheck. It has to be a W-2, yes. But sometimes it has to be your tax returns also. Why? Because the lender is trying to corroborate, is trying to confirm 2 or 3 years of pay information. And sometimes when we talk about pay information, we are directly or indirectly confirming also your employer. Okay, the whole thing about employer verification letter. This is important because the lender, especially if the lender is giving you a loan for, let's say, 3 years or 5 years, if the tenor of the loan is kind of long, the lender wants to make sure that you have an established history of responsible payments. That's what we call it. Well, that's what we call financial responsibility, son. Financial responsibility. So first, you have to confirm your employment data. So that you're making 20 grand, you're making 30 grand, you're making 40 grand. Okay. You also have to make sure that you provide your W-2s, your tax returns, okay? But also, in some cases, they will ask you for monthly bank statements. Whenever the lender asks you, please do not ghost them. You want to reply as soon as possible, okay? Because you want to accelerate, you want to speed up your loan application, your loan approval process, okay? And they might ask you also sometimes to provide letters from employers. Okay. Now, if you are a self-employed applicant, you can provide tax returns or bank deposit. That's pretty fine. So, big decision time, boss. Big decision time. Are you currently clear in terms of your income? Have you gathered all your income paperwork? Make sure that you do that, because this is going to be very important for you when it comes to corroborating your income information. The third thing I want you to think about is your DTI, your debt to income ratio, boss. So again, just to contextualize today's conversation, we are talking about when you have a personal loan application under review, the things you have to do to speed up the process, okay? So here we are talking about debt to income ratio. So you want to clarify any questions about your debt to income ratio. The thing here is that the lender has some, they have an algorithm. They have a credit risk, I would say, model. Okay, they have an underwriting model, and in that model, they have clear numbers for DTI. Like your DTI should be 30% or 36%. So the thing here is that, or any other percentage. The thing here is, the DTI has your debt payments on top and your income at the bottom. And if the lender is trying to clarify any questions or issues about your DTI, that just means that the lender wants you to confirm to them your total debt payments every month. And if they ask you that questions, please be fast. Okay, be fast. If they ask you, for instance, to say, okay, how much you're paying on rent or mortgage, how much you're paying for a car, for car loans, you're paying for student loans and whatnot, what kind of other debts you have to be very, very clear about that. Why? Because the lender uses DTI to predict your ability to make payments on new and current debts. Okay, they just want to make sure that you are not overextended in terms of debts. This is very important, and we got to really see. DTI is kind of synonymous with a CUR, your credit utilization ratio, in the sense that the percentage that the lender wants to see for your DTI is kind of similar to the percentage they want to see on your CUR, your credit utilization ratio. Now, credit utilization ratio applies for revolving credit products, such as lines of credit and credit cards, and your DTI applies to your total fixed debt payments. So, generally, if you have a DTI or CUR less than 35 or 30%, this is really good. Okay, really good. So here is the approach for you, boss. Here is the approach. If they ask you to provide more information about your DTI, please make a list of your total debt payments. Okay, and you also want to make a list of your total income sources and submit that to the lender. That way, they can be very clear. They can actually calculate your DTI very easily. Okay, it takes about 5 seconds. Okay, you just put on top your total debt payments, and you put at the bottom your gross income, and that's it. That's your DTI right there. I want to talk to you about repayment, boss. If your personal loan is under review, and this is for you also, grandma, I'm talking to you also. Dad, mom, I'm talking to you. Uncle, aunt, I'm talking to you. Everybody, I'm talking to everybody. If you happen to have a loan that is under review, there are things you can do. Number 4, you need to prove that you can pay back the loan. This is important because the lender is trying to make sure that they're trying to cover their ass. Okay, so they're giving you a loan. Okay, they're probably giving you 20 grand or 30 grand. Okay, but how are you going to prove to them that you have the ability to pay them? I'm not just talking about, I can pay you. I'm making good money. Okay, you're making good money, and so what? Making good money is not a justification, or is not a prerequisite to actually being able to repay the loan. You know why? Because there are a lot of players, there are a lot of people in this country that make millions of dollars and they're still broke anyway. I want you to just think about professional athletes. We have athletes who have been making millions of dollars for several years, and then 5 years down the road after they retired, they were broke. Why? Because their DTI is high. Their debt to income ratio is very, very, very high. So they're making a lot of money, but they're actually spending as much. So it means that you don't have no disposable income Okay, so if you don't make money anymore, you don't have savings, you don't have an emergency fund, you don't have a rainy day account, so you are just toast. Okay, so when we talk about proving to the lender that you can repay the loan, you have to show that you have stable income, very important. So your regular 9 to 5 has to be stable. You have to be making good money, and preferably you have to have the right deposit that goes into the bank where you want to get the money. That would be great. Okay, and you need to show other sources of income. So if you have other sources of income like alimony payments or royalties for artwork, for instance, or annual financial gifts, this can actually prove to the lender that, hey, listen, you can pay the loan back. Okay, and so in some cases, you can get a co-signer if needed, a co-borrower or a co-signer, because that person can also help you actually beef up your loan application. Okay, so all of these things happen when your personal loan is under review. In other words, the lender is not really sure whether they have to approve you or reject you. So those are things you have to think about and do. Most importantly, you have to do to make sure that you actually switch the scale in your favor, to make sure that the lender looks at your application favorably. Look at your application conducively. I want to talk to you now about collateral. Oh, this is really important. If your personal loan is under review, boss, son, brother, if your personal loan is under review and you want to give lender the assurance that you can repay the loan, or that something is that you do not constitute a credit risk, you might want to actually provide collateral. Yeah, you might want to provide collateral so that you can actually say, you know what, I'm ready to pledge this property to help you guys approve my loan. This is really good. So, your lender will see it as a positive development from you because you have skin in the game. Okay, so when we talk about collateral, we're just speaking about things like homes, vehicles. Okay, so the collateral is typically related to the underlying purpose of the loan. It has to be property on which you have clear title. In other words, that the ownership is yours. Ownership is yours. Okay, very important. So, and collateral can also be cash accounts, investment accounts, real estate, and collectibles like coins or precious metals. Okay, but you're gonna have to talk to the lender about what kind of collateral they accept, because not all collateral is accepted by lenders. Okay, and so what will happen here is that if you fall behind on your payments, or even worse, default on your loan, the lender can repossess the collateral to recoup the remaining loan balance. Very important. So money, boss. To actually speed up the loan review process, do you have enough cash to actually pledge as collateral in terms of investment accounts or cash accounts? I'm not asking you to have the same amount of cash that you want to get the loan for, but if you are applying for a $20,000 loan, do you have at least $2,000 or $3,000 in a savings or whatever where you can pledge? Or do you have a car? Do you have a card on which you have free title that you can pledge? Okay, big decision time. Well, are you ready to actually collateralize the loan in the first place? Because if you collateralize the loan, there are consequences. I just spoke about that, right? That property can be repoed to recoup the losses that the lender might have. So are you willing to go that far? Because there are consequences. So think deep about what you want to do. Okay, very important. And make sure that you are making the right decision for you and your family at any time during the loan review process. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are also having a conversation about personal loan under review, what you should do to actually speed up the process in your favor, okay? And I want to talk to you about, so here are a few pro tips to help you actually get the loan that you need and deserve real fast. So here are some typical personal loan documents. So you have the loan application itself, so the form, okay? You have also to provide proof of identity. We're talking about driver's license, other state issued ID, passports, certificate of citizenship, military ID, birth certificates. You got to provide proof of employment and income. So when we talk about employer and income verification, you got to think about your pay stubs, your tax returns, your W-2s and 1099s, your bank statements, and your employer contact information. Okay, very important. And they might ask you to provide proof of address also, so that the lender can see that you have a stable living condition, which is really important. Okay, so when we talk about proof of address, we're speaking about utility bill, a copy of your lease or rental agreement, voter registration card or proof of home, rental or auto insurance that lists your address. Okay, and if you want to qualify for a personal loan, okay, basically they want you to have consistent and steady monthly income, a DTI ratio that is less than 35 to 30%. Okay, minimum credit score of 600. That's the sweet spot. And so, and if you do all this and you're still denied, do not panic at all. You want to ask for the specific reason your application was rejected. You want to review your loan application for mistakes or inaccuracies. You want to improve your credit score by paying down your current outstanding debts. This is important, yeah. And most important thing, and we have said this before, you want to check for mistakes on your credit reports, because you never know. You don't know what kind of info they are just reporting to your credit, they're just showing on your credit reports. Okay, think about also increasing your income. Okay, and in some cases you might want to apply for a smaller loan amount. So if you ask, let's say you asked originally for 30 grand, right? You want to apply for 30 grand, and you realize based on your income info, based on your data, that your DTI is too high. Then you might want to lower down the original 30 grand to maybe 15 grand or 10 grand. That way you can boost your odds of approval with that lower amount. One thing I also want to talk to you about is that, next time before applying for a loan, if you don't want to have a loan under review for a long time, you want to seek pre-qualification and pre-approval. That way, you know that the lender has done already some preliminary research on your case, and that if they sent you a pre-qual link or pre-approval link, then you know at least that you have done 50% of the work already, that you might be approved. Remember, I talked about might be approved because there is no guarantee whatsoever that you will be approved. Okay, when we talk about pre-qualification and pre-approval. So the thing here is that when we talk about pre-qualification, you are pre-qualified for a loan and you get an idea of how much you might borrow. You provide enough information to become pre-approved, okay? And the lender runs a hard credit check and tells you if you're definitely getting the loan. This is what it is, okay? So during pre-qualification, the lender gives you an idea of how much you will qualify for and what the interest rate may be. Pre-approval is when the lender is likely to ask you for documentation regarding employment, income, and identification. So as long as nothing negative arises before you close on the loan, you should be good to go, okay? Very important. So what happens after pre-qualification, it really depends. It depends on what kind of loan you are asking for, and it depends on the lender also. And the thing here is that before you sign loan documents, make sure you understand what you're signing. Always important. The interest rate you are originally quoted may naturally reflect how much you will pay for the loan. The APR, on the other hand, better reflects how much you will pay annually because it includes things like origination fees, processing fees, and document preparation fees. Okay, and the thing is, boss, do not be shy. If you don't understand the fees, ask about them. Okay, and so a personal loan will affect your credit score, but not by much. We're talking here about 10 points, in some cases 15 points. So it's a small dip for you to get the money you need. So it's not a biggie, but those are things you have to know. And that's why we tell folks on this show to not apply for several loans at the same time. You want to apply, you can pre-qualify for several loans at the same time because there's no impact on your credit score. But when it comes to actually applying for a loan, do not apply simultaneously for several loans and hoping to get approved for at least one. Your credit score will really suffer. Thank you so much for your attention, folks. I really appreciate it. In today's conversation, I was talking to you about personal loan under review, 5 things you should get to be pre-approved super fast. Number 1, your FICO score. Number 2, your income. Number 3, your DTI. Number 4, your repayment. Number 5, your collateral. And I give you a few pro tips to help you understand the whole thing. And I also give you a bonus in terms of guidance, in terms of understanding what pre-qualification means versus pre-approval. Thank you so much for your attention. I appreciate it. I'll speak to you another time. But until then, remember, stay marvelous.